Assalamualaikum and hi, my name is Nur Kistina binti Zainuddin. Today, I'm going to talk about company background and operational overview. Now, let's look at the company background of Ajinomoto Malaysia Berhad. Ajinomoto is a well-known company for food in our country. They have started their business a long time ago in 1961. And today, Ajinomoto has become household name because almost every kitchen have their products. Next, let's talk about the first business line, which is customer segment. This segment makes product for every people to use at home every day. We can easily find their product in the grocery store or the market. For example, Ajinomoto sell to mix seasoning, seri aji menu mixes, and also chicken soup cube. Ajinomoto also make a low-calorie sweeteners for the people who care about their health. The second business line is the industrial segment. This is B2B market, which means they sell business to business market. Ajinomoto do not only sell to normal houses, but they sell in a very large quantities to other factories or big restaurants. For this segment, Ajinomoto supply pure MSG, food starches, and also special industries enzyme.
Paris, and I will be presenting, and I will present about performance comparison between IG against FBM KLCI.
Track Ajinomoto against the benchmark FBM KLCI from early 2023 until early 2026, which is almost 3 years, and what we found is an interesting market story. The very beginning, by just looking at the chart, Ajinomoto appeared to be flat. It even seemed to be losing out. However, as analysts, we knew better. This way, not a weakness in the chart, but only an adjustment due to the huge amount of special dividends distributed by the company to its shareholders. That case broke about a completely turn of events. Ooh, a surprise cash privatization was announced. The stock shoot upwards in a breakout like a sleeping tiger awakening to completely smash the entire market index. As the KLCI remained flat, Ajinomoto created huge alpha demonstrating how a strong corporate catalyst could decouple the stock from entire market.
So, then Faris, how was the market structure performing prior to the huge blast?
A doubter perspective, there was two perfectly clear phases. First phase, from mid-2033 to mid-2034 was institutional playtime. The stock price made a perfect stairway of a new high and low points. We mentored the OBV and it was going consistently. This indicates that the institutional players were quietly buying share behind the curtains and accumulate space, pure and simple. Then the stock had a long break from October 2024 all the way through 2036. The buyers and sellers battled for perfect equilibrium. The price was boxing into a ring, bouncing between a solid floor and an intentional ceiling, just resting its strength from the blast off due to the privatization catalyst.
Alright, thank you Faris for the explanation. Next slides. Alright, so my name is Muhammad Hazim Darwish, and I'm going to explain to you the next slide, which is chart pattern analysis. So next, I'm going to presenting about the chart pattern analysis. So there's are two types, classic double bottom reversal and also bull flag continuation pattern. So what is classic double bottom reversal structure? So there are formations. Equity form a classic and also defendable double bottom pattern before its main grows, and there are okay.
Satu, dua, tiga.
So I think that's it for the classic double bottom. And now I'm gonna explain to you about the bull flag continuation pattern. So the first one is the formation. The market pause during intermediate expansion to form a clear continuations bull flag. That's the formations. And the next one is components. The flagpole. Okay, so
Satu, dua, tiga.
so next in the trading line, there are indication which is ideal bullish where the reverse structure showing. Selling pressure ended at the firm horizontal support, and yeah, and the last one is breakout. Price cross highest point on strong volume institutional buying, which is it's breaking the structural neckline. So next, there are component flagpole, which is it's formed through aggressive accumulation by institutional investors. So there are two channels, whether it's downward sloping and highly compressed, and also channel with low volume. Next one is conviction. Its low volume shows no strong in the trend line, and conviction to sell during consolidations. And the last one is signal. Its breakout above the upper descending boundary line triggered, and it also triggered a continuation signal. I think that's it for my chart pattern analysis explanation. We go to the next slide.
For the first indicator, we have MACD panel in the middle, which is our trend following indicator, and now it is screaming bullish. Notice how back in the middle of May, the blue MACD line crossed sharply above the red signal line, and both have climbed well above the baseline zero mark, which tells us the buyers have completely hijacked the momentum. The tall green histogram bar shows that the gap between these moving avengers is wide, meaning the upward trend has been incredibly powerful. However, if you look up at the very last couple of bars on the far right, they are beginning to flatten out. The trend is still upward, but the acceleration is just starting to tap its brake. Now let's move on to the bottom panel, the RSI, which is the second indicator, also known as Relative Strength Index. While the MACD tracks the trend, the RSI tracks speed and exhaustion. By now, the RSI line has broken cleanly above 70% threshold. This officially puts RG into overbought territory. It confirms that this climb from the 12 ringgit mark happened incredibly fast. When an asset is overbought near a key resistance level, in this case, the 52-week high, it's a clear warning that the stock is historically overextended in the short term.
Recommendation. Based on our overall technical analysis, our recommendation is hold. We choose the recommendation because the stock still shows a strong bullish trend. The MACD continues to support positive momentum, indicating that buyers remain in control. Therefore, existing investors should continue holding their position to benefit from any further upside potential. However, we do not recommend buy at the current price. This is because the RSI has already entered the overbought region, meaning the stock price has risen significantly and may face a short-term correction or consolidation. Entering the market at this stage could expose investors to unnecessary risks. At the same time, we also do not recommend sell because there is no clear bearish reversal signal yet. The overall trend remains positive and the price structure still support the possibility of continued growth. For this reason, we believe that hold is the most appropriate recommendation, while new investors should wait for a healthier point before buying. In conclusion, our technical analysis indicates that Ajinomoto Malaysia Berhad has maintained a strong bullish trend throughout the 3-year study period. Our findings are supported by multiple technical tools rather than a single indicator. The double bottom pattern identified the beginning of the bullish trend. The MACD confirmed strengthening upward momentum, and the RSI highlighted both of the strong buying pressure and potential risk of a short-term correction. By combining this indicator we were able to make a more balanced and reliable investment recommendation. Therefore, we will conclude that hold is the most suitable strategy for current investor, while new investors should wait for a better entry opportunity. Overall, this analysis demonstrates how technical analysis can help investors make more informed decisions while effectively managing investment risks.